If you're thinking about buying a house in 2026 and you're going to be using an FHA loan, pay attention to this video because I'm going to shoot you straight, and most people in our industry do not do that. FHA recently released this report. It shows the folks that are 90 plus days delinquent in their mortgage and the reason behind it. These are a couple columns that stood out to me. Number one, reduction in income, 29%. Unemployed, 14%. Excessive obligations, 20%. And then you've got other of 7%, which you can pause this video and read through that asterisk down there, and it talks about what other is. But two of the things that stood out to me is the increase in the payment and increase in utility costs. So you add up all those columns and you're at about 71%. This is exactly what happens when you stretch yourself too thin and you buy a house. Remember, an FHA loan only requires 3.5% down. So you may not have put a ton of money down. You may even use a down payment assistance program to get into your home. Just because you can qualify for a mortgage does not mean you can afford it. I hear this almost every single day with buyers. Just because I'm paying a $3,000 mortgage payment, I think I can afford that or qualify for that to buy a house. But you got to remember, just because you can pay that amount in rent, you still might be living paycheck to paycheck with no money in your bank account. So you can't go into buying a home with that same mentality. If you do that, this is how you end up like these 70% of people that can't afford their mortgage payment. What you need to be doing is asking your realtor and your loan officer questions. What does the maintenance look like on this house? Is there an HOA fee? What do the utility bills look like? What about my homeowner's insurance? Do some homework on this stuff. Don't go into buying your house blind. And more importantly, if you have no money left over at the end of the day when you move into your house, that is a recipe for disaster. You may not want to hear that, but that's the reality. Because there's still the maintenance costs and everything else that you're going to find out once you're in your home, the things that you need to fix, the things that the home inspector didn't catch, the things that you're going to want to change to the home, it's going to cost money. So if you don't have the ability to pay for it, you're going to throw it on a credit card, which then creates more debt for yourself. Don't stretch yourself too thin. The goal should not just be to buy a home, it should also be to maintain it. Because remember, over time, real estate typically goes up, which means that's how you can build a lot of wealth. But if you bought your home and you can't afford it within the first few years, you foreclose on it because you can't make payments, it wrecks your credit, it wrecks your experience when it comes to real estate, and then you're trying to start all over and rebuild your credit to then buy a house again in the future. Don't become a statistic like the rest of these 70% of folks out there.